All right. Today is I believe Wednesday, March 22nd. Just two trades that I took. Both of them are in the financial sector. I just want to share the setup, what I was thinking, and for those who have been following my channel, all of my 37 subscribers. This is I trade price action. There was a time I used to use moving averages and things like that. I don't say they do not work, they do work, but whatever strategy that you choose to do, you just have to be consistent in them. So what was the setup? I love candlestick patterns a whole lot. For those who were familiar with the markets yesterday, most of the markets gapped up, but then they gave that gap away, and I think some of the things, especially tech, rallied towards the course of the day. So by the end of the day, the financials, things like BAC, WFC, Citibank, JPM, they all posted a shooting star. So of course, the first thing you want to mark is the low of yesterday, which was at 28.51. And the day is still in progress. I'm already in and out of this trade, taking what I have to take. So we have a 28.51 as our low. Our high of yesterday is 28.98. So let's call those the line in the sand. If we break the high of yesterday, of course, the profit target is going to be the most recent high, which is going to be 29.47. And if we break the lower side, the profits target is going to be 27.65, which I think that is about $1 and change. For those who are familiar with BAC only moved about $1.08 in a day, right? We call that the average true range of a stock, how much that stock typically moves. Now, of course, because while doing this, I still have a full-time job, so this I can also on the side. I look at the 15 minutes chart, on the side. So we have a 15-minute chart over here. And at what time did we break? Remember, I was telling us about the gap that we created yesterday. So if we look at this from open of yesterday to the close, to the close of 2 days ago, we have about 84 cents gap that we created that needs to be filled. So let's keep that in mind. Also, with that being said, the low of yesterday was at 28.51. Immediately we opened today, we actually peaked below that low in the first 15 minutes. But as you can see, there's nothing actionable. While we do have a wide range bar, which was like we called this, the name just skipped my head. Engulfing bar, a bearish engulfing bar over here. It shows you that, okay, yes, there's still a move that is going to go towards the downside, but then we defended that line for quite a little bit. Right now, I got into the trade when we posted this inside candle about 10:15 Central. I don't know. I think that is Central. I don't think that is Eastern Standard Time. 10:15 Central. And also, you also have to keep in mind the financial condition going on recently. SVB, Silicon Valley Bank defaulted, Signature Bank of New York defaulted, Credit Suisse in Europe defaulted. There's a lot going on with the banks. So, the banking stocks are weak, which means any bounce, typically you will fade those bounces. So you just got to keep that at the back of your mind. I didn't even look at the flow. This was just pure chart play. And of course, risking properly. And what was my risk on this is, all right, right over here at 10:15, we posted an inside candle over here. And this time around, when we broke below, then I believe, I bought about 20 contracts for this. And if you know what I'm risking at most back here. That's what my risk on this trade is going to be, which is only about 21 cent risk for an 84 cents, profit. That is 1 to 4 risk ratio, risk reward. Of course, I did not stay in for the whole thing. I got out on this bounce. So even if we go into a 5-minute chart and we make this a little bit more minute, you will see that we broke below, we retested, then we fade. This was that 10:15 move. 10:15. Let's move this to the side a little bit. Yeah, right about 10:15. This was that move that we have. This was that old 15 minutes candle. We broke below, we retested. And as you guys can see, when we broke below, there was not a lot of oomph, for it to rally against us. So that was the trade. That was very simple. That was very straightforward, right? I believe the profit I made on this was about 30% on those contracts. These were BAC weekly contracts. I was in and out. Now, the other one that I also took, the same setup. We can clear this one now since we are done with it. Will be in WFC. They also had the same setup. And as you guys can see, you can see some of my lines on it already, but I'm going to redraw those lines. Also, perfectly the same setup. This gapped up yesterday. By the end of the day, it gave up all of those gains that it has. So we're going to mark that low. We're going to mark that high that we also have from yesterday. Our profit target is going to be most recent high over there, and our profit target is going to be the next low that we have over here. Now, if we go to the 15 minutes chart, let's see the way these are set up from today. So over here, we broke to the downside. This was the open. It was a wide-ranging engulfing bearish bar. But if you look at this follow-up, it was not really actionable. So what did I do? Almost around the same time, this was around 10:30, right? I saw that we have this over here. We have a failed, for those who do strats, we call this a failed two up, right? Which was like, it was almost like a shooter, but not the best of shooters, right? And that was the risk for me in that trade. My risk was right here. I was only risking 13 cents. So I faded it. Immediately we went below. I went short on it. And as you guys can see, we pushed, and we came all the way back, all the way down. When I saw this 15 minutes candle, I felt like I've had enough of the trade, because once again, I have other things that I'm doing. I'm not just a trader. I have my job to do. You understand? So once I saw that we pushed back over here, I got out of these contracts. So that was the contract both on BAC and WSC, all price action. As you guys can see, I don't have moving averages or anything. And if we look at that risk to reward, if we look at, we have a gap over here that we are playing, which is about a 99 cents gap, almost $1. I think I didn't have that well drawn. Let me fix that. So that was a 99 cents gap. Yep, that was correct. A 99 cents gap right there. And I was only risking 13 cents, which was this failed move to the upside. You are, and some, if we are looking at, chart patterns and things like that, some people will call this a bear flag, a big move, a retest of that move. And, even if we throw Fibonacci on it, which is some of the things that I'm teaching my student, look at how that aligned perfectly on Fibonacci. I'm going to go to the 5-minute chart and have this redrawn for us so we can see it perfectly. Look at how perfect that aligned on Fibonacci, right? We have a big move in the morning. We retrace that move back. We have a 50 we have a 50% retracement. And even let's say you are taking this trade off Fibonacci, you are only risking how much? You're only risking plus 0.54 all the way to, let me remove that magnet so we can draw. You're only risking only 7 cents on this trade, right? Of course, you can apply this to things like SPY and other things, but the movements on those instruments are a bit different. And since we only trade options, you've got to think of the Greeks, the delta, the theta, you understand? So you might not be able to hold on longer if this trade is going against you. You understand? So we pulled back to that 50% Fibonacci. You could take the rejection off of it, boom, we rejected, good candlestick formation. This was a shooter. We broke below the shooter. The third candle later on, you could go short, and knowing that, hey, if it pushes you back above 38.54, you get out of the trades. Those are the trades. I hope it helps you in your trading journey. Like, subscribe. That's up to you. You understand? But thank you for watching.